March 12th, 2025. I don't have any drawings on today because I didn't make one. I actually took a nap after trading. I'm not sure why. I was just really, really tired today after trading. So I haven't really put too much preparation into this video, but I'm just going to free ball it a little bit. Anyways, I thought that there would be sellers above yesterday's high. Reason is the daily chart. There was a bear close on the daily chart. And usually when you get a bear bar, in a tight channel down, especially when you've had a micro channel, we haven't traded above another bar in 6-7 days, there's probably going to be sellers above. So I put that in my pre-market report. Um, you know, this was an important area simply because, like I said, it's a bear bar on the daily chart, but it is the first time we've traded above a prior bar in quite some time. Close of three. Some traders could sell the close of three. It probably does need a second leg. It's, big gap up is possibly the second leg up from this rally from 49 to 65, and then a pullback, and then a second leg up. So there's logic to selling the close of three or selling above four, expecting another leg down. 6-7 could be that second leg down. 6-7-8. 6-7-8 might get a second leg down. It's not unreasonable to look to short maybe the close of 8 or something along those lines. I did not take any of those trades. I'll go over my trades in a minute, like usual, but I don't think it was illogical to be selling this close, expecting at least another leg down. But it is one pullback, 2 legs down, so you do have to be a little bit careful looking for it to sell in the third leg. Today, I sold the close of 15. I sold more above 15, and I got out on the close of 18. I thought, there was logic, 13, 14, 15. It might be a third leg down, but I thought we would at least test the bar 54 high. Reason being that we've been, this is a trading range, right? It's either a bear trend or a trading range. If you think that bar 1 through bar 15 is a bull trend, well, I have a bridge to sell you. So most likely that we're either in a trading range or a bear trend, and either way, we should test the bar 54 high. So I sold the close of 15. I sold more above 15, and I expected us to get to at least the bar 54 high. I ended up exiting on the close of 18. I sold the close of 21. So the problem with this is it's a fourth leg, right? You could argue 1, pullback 2, 3. You could argue maybe you count 5 legs, whatever. 1, pullback 2, pullback 3, pullback 4 is the way I counted it. So I thought we had 4 legs down, and I sold the close of 21. I knew that it was probably a fourth leg, so I was going to be really cautious scaling in. So I sold the close of 21. I sold more at the bar 17 low during 2022. And then when we got 23, which was an opposite signal, I reversed to long on the close of 23. So I lost a little bit here, but when I bought the close of 23, I made up all of it and then a little bit more. And I got out over here basically on the close of 28. The reason I reversed is because we have 3 legs down, 4 legs down, and it's either a trading range or a bear trend. And I thought it was a lot more likely that it was a trading range. It wasn't moving. We don't have a ton of open gaps. We do have, well, that's not even an open gap, right? So I thought this with yesterday, and that the lowest the bears would get is around here. So while I was selling down here, I was trying to be really cautious, knowing that we probably weren't going all that much lower. And I ended up, obviously, like I mentioned, buying the close and catching a good chunk of this leg up. I did not hold for leg 2 and leg 3, although I thought this should probably get a second leg up. The whole thing might need a second leg up, right? So you could argue that it was this, but on a 15-minute chart, right, we have all of this and then a small second leg. Possible we needed one more leg up. So 1, pullback 2, pullback 3. Granted, 51, 52, 90% chance that or I guess 86% chance that we're going to get some sort of second leg down from 51 and 52. But this is a really strong rally. So I still think we might have to go a little bit higher. But anyways, this was a good looking rally. I was flat for quite some time. And then I did not sell the close of 50. So I didn't take any of these buys. I thought it was 3 legs up, and we were in a channel phase, and we were probably going to enter a trading range. We had down, up. I think it's a trading range. So I did not sell the close of 51. I thought that it was a little too bullish, or a little bit too many bull bars for me to sell the close. But I think that's a reasonable trade. I sold the close of 54. I scaled in above 54. I scaled in a couple more times on the way up. I didn't really love it. I had a pretty wide stop. And this is the issue with the type of trades that I've been mentioning. I win a lot, but the losses are going to be, I didn't lose this trade. I broke even on it, but I win a lot. And when I do lose this trade, I know I'm going to lose a lot bigger than my wins. And so what you have to learn how to do, well, I say you. What I have to learn how to do with this particular type of trading strategy is learn how to you know, be better at scaling in larger on trades that are higher probability and be quicker to get out on trades where it's going poorly. And one of the ways, you learn how to do that is by doing a lot of testing, the back testing stuff and a lot of testing a whole bunch of different things and starting to understand, when the trade is not going in your direction. If you sold down here and you didn't reverse and you got stopped out, that's fine. I mean, you're learning. It's okay. It just takes time. But this was a trade I was very confident that 49 through 54 was going to get a second leg, even if we traded all the way up to the high. And this is a prime example of why you can't put a stop above the high for these kind of trades. Because a lot of times it'll go to the high and then just reverse down. So I was selling more as we went higher, and I ended up getting out over here for around break even. I could have scaled. I sold bigger on the close of 54 because I thought we might try to get somewhere down here. But then obviously as we pulled back, I was limited as to how much more I could scale in. So again, I have to work a lot on where to scale in and how to do this more effectively. It's going to take time, but I think that in a year's time, I can be really, really good at this as long as I continue to do the exact same thing every single day. I think that's the big thing with trading. I've been preaching about it again for the millionth time, but I think doing the same thing, over and over is really important. I do Muay Thai. It's a martial art, and it's pretty simple. It's punches, kicks, elbows, and knees. And across from the gym, there's jujitsu, and I talked to some of those guys about what they think is more difficult. I know a lot of people who do both, so I talked to them, and they say that while it's in jujitsu, it's harder to learn the basics because there's so much to learn. But Muay Thai is harder to master, but easier to learn the basics. And I kind of relate making sure you learn the basics of one particular type of setup in this versus, if you're just reading Al Brooks books, you're trying to learn 500 things at an elementary level versus trying to learn one thing at a very advanced level. So that, I obviously really like Muay Thai. So that's my bad metaphor for the day. Anyways, for entries, I thought it was okay for you to sell the close of 3. Like I said, you could sell the close at 8, you could sell the close 12, 13, 14, 15, 16, 17. You could sell the close 18, 19, 20, probably get out 22 or 23, buy the close 23, 24, 25, 26. It's buy the close all the way up, maybe to the close of 33. I would not buy the close of 37. You have 3 legs up, and I would exit below 38. It's basically a wedge top. I mean, I don't know. You're probably not going to get too much more to the upside. So 38, 39 is going to get a second leg, so you can't buy above 40. If you sell the close at 39, you have to be willing to scale in more above 39, and then you use 41, 42 to get out. So if you sold the close at 39 and exited above 40, you can't do that. You have to wait and just keep sitting through the pullback and sell more. 44, 45 consecutive bull bars, high probability of a second leg. So you could buy during 46 and expect a second leg up, or you could buy the close of 45, scale in 46 and get out whatever, 47, 48. 49, 50, 51, 3 bear bars. I don't think it's wrong to sell the close or 52, 53, 54, as long as you scale in, right? So, or you could get out quicker. There's nothing wrong with that. You could buy the close of 57 for a second leg up. 61 should get a third leg up, but 63, 64, hard to be buying closes up here, especially when we should get back to the bar 54 close or one tick below the 55 low. The daily chart. All right, okay, sorry, I'm looking at the wrong thing. It's been a long day. As I mentioned, we sold off, right? So probably traders looking to sell around this close and get another leg down. We should go below the prior day's low. I think we have to get to 5,500. When we get to 5,500, I'm going to start looking at this, right? Wouldn't take too much more for us to get to 5,400, and we're going to go there. This is a pretty obvious magnet. So there's not that much holding the market up. So I think if we start to collapse down to 55, we can get to 54 pretty quick. I don't know if that means if we just go straight down to 51. It's all the domino effect, right? Because if we get here, well, this never got tested, the low of this. And if we get here, well, then we're definitely getting to 5,000. But that's obviously I'm obviously getting ahead of myself there. But I do think we get back to 5,400 at some point, or rather quickly here. And past that, I'm not too sure yet. It really just depends on the next couple of days, right? It depends on when the Bulls can get 2 or 3 consecutive bull bars closing near their highs. So if the Bulls can get a couple of good-looking bull bars here, let's say tomorrow's a big bull trend, maybe 30% chance of that. But if it happens, then odds are the bear trend the bear trend might be over for now. We're going to start to go more sideways. So you just have to keep all that stuff in mind. The weekly chart, we have 4 straight bear bars. So far, at least, the Bulls are hoping that they're not going to get a bear close today, or on the weekly chart. We probably will, obviously, because the Bulls have a lot of ground to make up. But with the size of the bars, it could happen. And as I've mentioned with the monthly chart, we'll see how this month closes, but I have a tough time believing that the big bear trend is going to start with a doji bar. But I could be wrong. I could absolutely be wrong. It's possible that this was the start and then we trapped traders out by a couple points, which is what basically ended up happening. And now we're getting the reversal down. I don't know how much lower it goes. There was a time where I thought we would get somewhere back into this area, but I'm not really that convinced. I need to see a really, really good looking bear close that definitely needs a second leg. All right, that is going to do it for the review. I appreciate everybody watching. I don't say that enough, but I really appreciate, when I started the channel, another thing about working hard and just working consistently, the first 100 videos I posted on this channel, I only had 20 subscribers. It took me like 9 months to get 100 subscribers. And then like a year after that is now, and I have like 1,600 or something. So it's all a very parabolic curve, and it's the same way with trading. It's just very difficult to get to the start of that parabolic curve and takes a lot of years. So just keep working at it. All right, that's it.